All right, everyone, here we are with another video with Invest for Tomorrow. And to all the first-time viewers and investors, welcome to the channel, Invest for Tomorrow. And to all the subscribers, welcome back. We're going to cover about the S&P 500 index. We're going to look at an article talking about what made this run go up, how the S&P 500 index and the other indexes are doing, and the 10-year Treasury bond. So stay tuned for all this information. So as we can see here, the S&P 500 had a big jump. What a jump. Probably one of the biggest jumps in the last several days. But one thing I want us to be aware of, and I always say it, let's look at the behavior and how that can go ahead and give us some insight on what's to happen again. So based off of the chart, I want you to look at it real quick. And if you see any exact correlations, if you can draw something, or if you can pay attention to the green, right, bars going up, do you see a correlation? If you do, we're going to come back to it in just a moment. But one thing I do want us to say is that we're going closer to the overbought area, which could signify a possible pullback somewhere in the near future, anywhere within the next week or two. So keep that in mind. So here we are with one of the first articles that I mentioned earlier, and the dip buyers fuel the stock rebound, Treasury steady, markets wrap. So the Treasury steady, it looked great, but it's not looking so steady anymore, especially as we're talking. So we're going to jump into that in just a moment. But the dip buyers fuel the stock rebound. Now, why is there the dip buyers fueling the stock rebound? Well, me personally, I look at it this way. This is the lowest point we've seen in the last several weeks and since the peak, and we're almost back to the end of January, beginning of February numbers, and that right there is maybe the lowest we'll see the market, right? Or one of the lowest dips we've seen so far. If you look back, the S&P 500 index, when we were back at the beginning of February, the end of January, a lot of stocks were actually up really high, even though the S&P 500 was down at this point. Now, if you put the S&P 500 next to the numbers of here, it'll look like, well, you know, we haven't pulled back by much. Well, actually, that's not true. If you look at some of your favorite stocks back at this point and back to where we're at now, even though the S&P 500 is almost in the same area, some of your favorite stocks have probably gone down by 40, 50, 30%. You got to think about that for a second. Or some of the stocks you were watching. So these are probably the best prices we're going to see right now in the next several weeks. Or it could get worse, right? We're in the midst of a correction so far, and the NASDAQ just hit the beginning edge of correction. And it says it here. NASDAQ 100 down 10% from record. That's the beginning of a correction. Then it could last from 10% to 15%. You got to watch it closely. And then once you get closer to 20%, 15 to 20%, and 20% and beyond, you know, we're starting to hit a crash. So we're right now in correction zone. Hopefully we stay pretty close to that, not much further from it. But the NASDAQ hit the 10% from record. Now, U.S. stocks on the S&P 500 rise, right, after jobs report. It was a pretty solid one. So that's a pretty good thing, too, overall for the economy. I'm really glad to see that for the American people. It's not all about the stock market. It's not all about ourselves. It's about the country as a whole. We all play a big piece in the big puzzle. So by massive fiscal stimulus and vaccination drives, those are the two other things creating an economic rebound, right? And that right there is giving a lot of hope and, you know, optimism is the word to most investors and to even institutional investors as a whole. Yesterday, Jerome Powell came out and he talked about interest rates. He did mention, you know, everything about inflation. So he's like, hey, inflation comes, we're going to handle it. Maybe we can price it in, or, you know, let's just get through it. Let inflation do what it got to do. And then we're going to figure it out, or everything will rebalance itself. But interest rates, I'm making sure that we're going to keep them low for the next year, year and a half, or 2 years. That's a good sign. But a lot of people aren't really trusting him, right? A lot of people are kind of being a little hesitant to his words. But this is the most important thing. It's mainly driven by fiscal stimulus and vaccination drives, right? Vaccination is being ramped up, and it's making the whole entire economic outlook and the country look better, and worldwide, as these are being distributed around the world in many different places. Now, massive fiscal stimulus, everyone's excited about, but that does have some of its effects in the long run. We'll have to see if this fiscal stimulus can definitely bring up the hopes of many investors and bring things to start to run till the next time that our fiscal stimulus is about to expire, which is probably September to October range. And then that's going to be something else to be worried about if there's no second stimulus. That's how the market and investors react, right? So here we are with the 1.57 showing on the chart of the 10-year treasury. So if we go back and we put the 5-day, it went from 1.55 to 1.57 in just the last several, hours or minutes actually. Now, the highest that we reached was almost 1.6. And then they're talking about, obviously, in this article back here, how Treasury's steady. And yeah, it was steady throughout the day, and it kind of started going downwards and kind of hanging out sideways. But when you look at the 5-day, we've been picking up pretty fast. And when you put the 1 month, right, you can see how we're at the peak of the last month's growth here of this. And then when you put the 3 month, I mean, that's a big jump. You put the 6 month, big jump year to date. And then you put the 1 day, it's going to spike up right now real fast. Watch it, just watch it. And there you go. So it's just incredible how fast this is moving. And even though it looks every time like it's coming back down, it might continue to rise. So we may not see the effects of this rising in the market for the next several days because everyone is being fueled by the hope of stimulus, and also the job outlooks is looking good here, right? And then also vaccinations being ramped up and everything like that. And everyone's saying, well, I don't know if this is the lowest. We'll see it. This might be the lowest. We may see it in the next several weeks or maybe month. We might have just hit the bottom. I don't really believe that. We need to be very cautious. We need to watch this, and we need to understand this. So we're almost in oversold on the 30-minute. And when we put the 1 day, we have a lot of room to go downwards. We went a little bit past, 50%. And then when we go over to the 1 month, we have tremendous room. We're actually in the oversold area. So we really, really need to watch this. We need to see what's going on. The 1 month is actually kind of misleading and very confusing. But the 1 day definitely shows us a little bit more of an accurate representation. I mean, we've been pulling down and it's been pulling down with it. And if we go down a little bit more, we could see ourselves into correction territory. And then from there, we need to see, are we really in a correction or a stock market crash? Are we really in a stock market correction or are we really in a stock market crash? And I know I repeated myself, but that's how we're going to question ourselves and see what is going on. But one thing I do know is that right now we are in this situation, and I don't want beginning and new investors or learning investors and even experienced investors to start to, get discouraged about the market. These are the times where you find out if you're really an investor, and that's why you always want to keep some cash on hand. They usually say anywhere from 20 to 30%. And also, this is where you learn to understand the fact that you need to understand what stocks you are investing in before you make a decision, because you may be looking at, the outlook of a company, and you may be looking at things from a different perspective, and you don't understand completely, the back end of stuff and the financials. And then that's why certain stocks fall so hard, so fast. And then you got stocks that are not falling as hard. I mean, Apple's the perfect example. I mean, yeah, it hit a peak here of 144. It did that almost in the past, right after the split. And then it started to fall, and then it started to rise up, and it's been falling. But it hasn't broken through $100. It's still above, pre-split numbers. So, this is a strong company. And I always go back to Apple because their market cap is one of the largest, and they're a great example of knowing why you're in a stock and also understanding, the pullbacks and looking at them as opportunities. Every single Apple investor right now is looking at Apple as a major, major opportunity. Like, no lie. And I bet there's people that are probably invested in Apple that watch my videos at some point or are invested or trying to build their portfolio with Apple because, hey, 121 per share isn't going to give you much gains in the next few days or next few months or year. It's going to take several years, but it'll pay off. And they're trying to build their portfolio with Apple. I would love to see your guys' comments down below on the conviction that Apple gives you. So anyways, back to what's going on in the market. So Tesla is a great example of a stock that's going into oversold area and so forth. And it's showing us exactly what's going on in the market. So a lot of millionaires, billionaires are retail investors that are reallocating their investments. They're not going into innovation and tech right now. They're moving that money and putting it somewhere else, as well as institutional investors. And when I say somewhere else, I mean they're going into many different sectors that they believe to be a little bit more stable or their true conviction stocks. Now, it doesn't mean that they won't come back to these sectors. It's just that they're also trying to put a bet, right, and take the risk on stocks that have to do with reopening. You know, that's been all over the media, all over in different articles. So that's another thing. So it's not like the fundamentals of these companies are terrible. It's just reallocation. So that's another thing too that's showing me why we're probably not going to crash, quote unquote. If anything, we're just in a slight correction. It may even be healthy, and it's going to be the start of the next bull run. This is how bull runs begin. Every single investor, right, that has started in 2020 investing, my message to you is you came in during the bull run. There was investors investing in the market 2018, 2019. They took that hit, they took that pullback, and they've been investing before you, with you, and riding the bull run up. And here we are investing again. So I don't want investors to get discouraged by the normal behavior of the markets. It's going to take several years to understand the market, but don't ever run from it. Don't ever get discouraged. Learn from it. Learn from it. Okay? I hope you guys learned something new. And as always, thank you guys so much for watching. Share this with your friends and community. And all I ask from you is to smash that like button. Smash that like button to let me know you watched this video so that more investors can find out about this and come across it to learn more and understand why the market is up today and why we want to pay close attention about the fact that we may still be in a correction, quote unquote, how others are calling it a crash. We're nowhere near a crash yet, and if we do end up in one, I hope we don't, but if we do, we're going to get through it. This too shall pass, and opportunities are going to be presenting themselves more than ever, because during the correction and the crash, as I stated, it's the beginning of a fresh new bull run. Thank you guys so much for watching. Let's make some money.